Greetings, members one and all of the Salivation Nation. Gold and silver futures have settled higher to tally its sixth weekly gain in a row. Let's explore. Yes, that's right. And it looks like that investors are awaiting additional fiscal stimulus. And that's kind of got them thinking that the gold and silver are the best places to put your money to protect the decreasing purchasing power of the dollar as they continue to just throw money at our problems out there for sure. Let's take a look and see what the market's doing. It looks like that gold has recovered a little bit of losses from yesterday. With up almost $15. Silver is up almost 1.3% to almost $19.50, and platinum is up $22. Pretty amazing recovery there for platinum, and palladium is up over 2% as well. Fascinating indeed to see the metals take a move in an upward trend. It seems like we had a slight reprieve the other day, but basically we're back in action again with the precious metal prices here. This comes to us from Market Watch. Gold futures on Friday registered a sixth weekly gain in a row, buoyed by a combination of rising expectations for additional fiscal stimulus in Europe and the U.S., as well as uncertainty over the global economic outlook as the COVID-19 cases continue to rise. Both gold and silver traded up for the sixth straight week, trying to establish a base around $1,800 for gold and around $19 for silver, said Fawad Razakzada, market analyst at Think Markets. Investment demand for the metals should offset any weakness for jewelry purchases due to ongoing economic uncertainty and, more to the point, a prolonged period of zero to sub-zero interest rates, he said in a market update. What's more, the U.S. dollar remains out of favor despite bouncing here and there. Given that non-interest bearing and buck-denominated gold and silver stand ready to benefit further, said Rakzada. Meanwhile, silver, which is also an industrial material, could experience relatively higher demand compared with gold as the world economy recovers from the pandemic. And that may be what really brings silver back into some sort of normalcy in the price. But I also think that if we're really going to see that price action move more, we need more demand from the, quote, investor side. Gold for August delivery is up 0.67% on COMEX, rose $9.70 to settle at $18.10 an ounce. While September, silver added 0.88%, added 19 cents, or 1% to $19.76 an ounce for the futures. That's getting us closer to that $20 mark, but it's going to be a tough haul up to $20, I feel. And speaking of silver, this is an interesting forecast here by FX Empire. Silver markets continue to grind towards the major figure of $20. They've fallen on Thursday, but found enough buying underneath to continue to cause major bullish pressure. Just above, we have the $20 level. Silver markets have been volatile again during the trading session Thursday, initially dropping rather hard, but then turning around to show signs of life again as we continue to strike towards the $20 level. The $20 level, of course, is one that is rather psychologically and structurally important, so do not be surprised at all to see the market try to break above $20 level multiple times, but eventually the author thinks it will happen. If and when we break above the $20 level, it is likely that silver will take off for a bigger move, perhaps as high as $50 over the longer term. Now, that is quite a stretch. I don't know that I would go there, but it depends on what he means about longer term. Could that mean 30 years from now? You never know. Ultimately, that would be a repeat of what we had seen during the first great financial crisis, which was a powerful move, obviously. It does not mean that we get there overnight, just that it would be a longer-term target. Well, and that is a reasonable assertion to make in a normal situation where this thing has happened before. But history may not repeat itself this time, considering that silver is seen as an industrial metal. If we have another economic crisis, that means there can be less demand for industrial silver, which means that could slow any kind of uptick moves for silver out there. And so, yeah, it's going to be very interesting to see how that plays out for sure in that regard. But I don't necessarily think that if it reaches $20, that we can even expect over the longer term that it's going to get as high as $50 because of that move. But, other things have come into play too, with gold staying nearing record highs already. And if it were to surpass the record highs, and we see an increase in demand from the physical side, then yes, we could definitely see those higher numbers in the longer term. It's going to take quite a while to build up, and my feeling that will be the case. Gold logged a nearly 0.5% weekly rise and was up 18.8% for the year after hitting its highest level since 2011 earlier this month and moving within striking distance of its all-time high. Silver ended with more than a 3.7% higher for the week. Most active gold and silver contracts logged the sixth straight weekly rise, according to FactSet data. Gold prices are steadily rising as investors start to raise their stimulus expectations on coronavirus, the second wave fears, said Edward Moya, senior market analyst at Owanda, in a note. Gold is also starting to benefit from election risk as Wall Street can't ignore the polls anymore and is starting to price the risk of a Biden presidency. Given presumptive Democratic nominee Joseph Biden's lead over President Donald Trump in the polls. Yes, and in key battleground states right now is what those polls are saying. The White House and lawmakers face increasing pressure to come up with additional fiscal stimulus plan ahead of the expiration of supplemental unemployment benefits at the end of the month. That's right, it is D-Day for many Americans on those benefits, the end of July here. So we shall see. White House and lawmakers face increasing pressure to come up with additional fiscal stimulus. And European Union leaders on Friday kicked off a 2-day summit aimed at reaching an agreement with a 750 billion euro recovery fund. Christopher Looney, analyst at RBC Capital Market, argued that gold's gains have been fueled in large part by inherent uncertainty that has accompanied volatility in equity markets. So that is kind of where things are. People are nervous out there. There's a lot of unknowns, especially with COVID. And really, that's been driving most everything out there. Everything goes back to that, it seems. Among other COMEX metals, September copper rose 0.1% to $2.90 a pound, and platinum rose 1.5%. Palladium rose 1.39%. It's interesting because I really hold two different views in the economy. If we can get the coronavirus thing under control and get things moving in a positive direction there, really, the overall indicators for the market would be good and the economy would recover. But there is also an underlying problem with what's going on with the Federal Reserve, with these the repurchase agreements, and underlying trouble with the dollar itself. The dollar is in trouble, and that could have an economic impact that really is unstoppable by no matter what administration, without actually resetting the dollar and providing a new level of faith rather than fear in our currency. And that is the underlying problem. Debt is a big part of it that we have to deal with. But I think we just need to get through this thing at the moment. But if that happens and there's no more faith in our currency, watch out. Gold and silver will reign and rule the day. We'll see what happens there. But that is the story for right now, where things are. And this watch of the markets, gold and silver are up higher among uncertainty over all things geopolitical and domestically, politically, and with this virus that's out there. Perception is reality, folks, and that is where we are. What will happen the next coming week, we shall see. My guess is we're going to see the prices continue to climb steadily upwards, with maybe a day or two of sell-offs, people taking profits. But by and large, I think we're on a trend upwards for both metals. Post your thoughts below in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please encourage you again, and the third time to encourage you to rate. That means hit that like button. Comment. That means to type something in the comment section below. And subscribe, which means to hit that little red button that says subscribe on it. I can't think of any other way to say it. Take care.